Well, hello everybody and welcome to the Middle Class Investor. It is about 5 o'clock on Sunday, and as usual we're looking at a chart of the S&P 500, and you can see here, let me zoom in a bit, we had a kind of a range week. We went high and low. Some of the internals are weakening a little bit, but still, could just be a pullback into, a move up to new highs along the trend line. We'll just have to wait and see. I'm prepared for lower if that's what the market gives us. If the market doesn't give us lower, then, I'm prepared for that as well. All right. I guess just to recap the big picture, our current stance is that we've got some sort of consolidation pattern sideways that will end up in a wave 4 and ultimately higher prices, probably above this 3100 area, but not before heading south about 20-25% first. So that ought to be pretty exciting. Hopefully you're prepared. I mean, we've talked all along in here, when it starts getting close to the top, what's the reward for the additional risk? And if in fact this is a consolidation pattern, we're not going to have a breakout here. Okay, now we could have a breakout here, but even then it should just be slight before we get a pullback. So if we get a breakout here, then that tells us that this is more of a double zigzag or a triple zigzag kind of move here, which would be a little bit unusual, but not impossible, and that the future prices are still lower in some sort of wave 4. Now, if it broke out, pulled back a little bit, and then went substantially higher, then there might be this could be wave 5 here, in which case this was an ABC, and this is wave 5 up. But the problem with that is this looks very overlappy. I guess it's possible that it's some sort of not ascending triangle, that's not the right word, ending diagonal, but it really at this point doesn't look like one, so we'll just have to sit tight for now and go with our original forecast until we're shown to be incorrect. All right, let's look at volatility index. I mean, we're getting really close to that low that I was talking about. Pulled all the way back to here, which is pretty darn low, below 14, but still hasn't broken this trend line. And I don't anticipate that it will. I think volatility is going to pick up here in the next several weeks as we head lower, and I think that's going to be the surprise. There's going to be a big surprise to the downside. We'll see. I mean, it doesn't really pay to speculate on that unless you have a trade set up and you've got your risk and reward well defined. So let's look at the 30-year Treasury. As you can see, it really took out here week before last, which we talked about. I think we talked about it. And sorry about that. I'm struggling with this little tool. There we go. Pulled back this previous week, and could be setting up for something higher. This could be like a 1, 2, 3, 4, and 5, and then in other words, we may have seen our low rates. People are talking about zero rates. I don't think it's going to happen in the United States. I think the only reason it's happened in some of these other countries is because we had such a huge QE program for so long that these other countries really had to go low in some of their bond programs. So we're looking at Germany here. Germany's kind of went up a little bit, and it's kind of consolidating. Um, again, some people are saying that Germany is already in a recession. I don't know. I mean, the way they measure these GDPs is it's kind of goofy anyway. So who knows really what a recession is in terms of the way the government defines it. So here's the UK. We're going to look at the British pound, US dollar here in a minute, and I think that's going to be a continuing place to have the markets move north going forward. So let's go ahead and switch to toss charts, and let's get on something longer than a 1 minute chart. Let's go to the weekly max, and what we're looking at here is the ES, which right now is up 950. So we're gonna have an up day, I guess, tomorrow. We'll see. So far we got a pretty good ways to go before we have an update tomorrow. You can see here, but right now we're up 950 in the pre-market, and like I said, it's only been open for about an hour, so we'll see. Let's look at gold. Again, gold came up to this 1.27% area. Looks like it's wanting to pull back. The MACD is starting to roll over a little bit here at the highs, so that's usually some sort of confirmation that that's likely going to happen. Silver really pulled back hard, kind of made an Eiffel Tower move here. Again, the MACD is starting to turn over. Both of these markets are at locations where we anticipated that they would start to get a little soft. Oil also been getting soft, although we had this, there was a big, let me zoom in a little bit, there was a big up move. You can see it here, this gap up and run up to here on that news about Saudi Arabia, but then it just continued to sell off, and looks like it's still selling off. It's up right now a little bit over last week, but still looks like it wants to go lower. So it could run up here and make a slight new high, but right now it looks a little, I don't know if I'd be long oil or oil stocks right now, although they did get a big bump. I mean, I know somebody made a lot of money on that move right there. If you zoom in on it, let me do that. Let me zoom in at like a 15 minute. I wonder if I can go 5 minute. Yeah, I can go 5 minute. So this person I knew was bought somewhere along in here, the futures, and pulled back a little further and then gapped up. And you could have bought in here. This was all, you could trade all this right in here. And then the news hit, and she made a big chunk of money. So good for her. She admitted that it was a little bit lucky. But sometimes that can happen. You can a news event hits just at the time you just entered. Of course, it could go the other way too. I mean, let's look at that, because that that's an important thing to understand. Let's say you got in right here, because we're not trading during the market hours, right? This is after hours. Let's say you got in right here and it gapped down, maybe gapped down to here, where you could lose a lot of money too. So most people, when they trade things like oil, crude light contract or something, they trade during regular trading hours. That way those kinds of things aren't likely to happen. But in this case, it worked out great. So I think she made over $40,000 right there. So that was pretty darn good. All right, let's look at Euro US dollar. We've been looking at this for a while. I've been nibbling at it, looking for a place to get in, and probably going to try to get in somewhere here this week. We'll see. Of course, I'm looking more at the 6E because on the 6E they don't charge you interest, or it's built into your contract price or something, but you don't get charged daily interest by your broker. So I like that a little bit better. You can see here we've got it's a little bit of a challenge because this is such a long candle. I hate when they're this long like this. I'd rather it be like this and then have this be the low day candle. In fact, let's look at the daily chart and just see. Yeah, so here's the same thing. Here's the low day right here, and you can see we're above that. So, you know, I might let it pull back a little bit and then try to nibble on it and get in and try to start building a position there. I think the euro is going higher, dollar's going lower. So, British pound. Oh, that's the wrong British. That's British pound JPY. British pound US dollar. It's right there. You can see we had a really strong move off the bottom there. Let me zoom in on that. And I just think there's a good opportunity here in the British pound US dollar. You might want to see if it pull back a little bit, but it might not pull back until it gets up here. I mean, this might be the first stop right up in this area. Highlight that a little bit so you can see. So in other words, just got a ways to go before it stops maybe in this area. So these are some of the things you have to kind of decide is, you know, how am I going to handle entering in the middle of the trend. What you could do is if you entered right here, you could put a stop below here, at least to protect your downside, and then just try to get in, you know, here and there. The British pound, if you buy the futures, the British pound is it's a little bit bigger contract than the. In fact, let me just show you. If I go over here to active trader, and I go on the 6E. Okay, let me just do the 6E, and let me just say, let me put an order down here at 1.07, so it doesn't hit. And let's okay, so I don't even need to put an order in, but see, one contract, the buying power is $2,200. All that means is they're going to set aside, you need to at least have $2,200 in your account to trade this one contract, and then when you do trade it, they'll tie that amount of money up. That's all that means. But it kind of gives you an idea of the size of the contract. So $2,200 to buy one contract of the 6E, which is the euro. If you bought one contract of the 6B, again, let me get down here, pretty darn low, something below 1.2. Well, just here's fine. You can see, well, it's not that much bigger. It's only $2,300. So I don't know, for some reason I was seeing that a move in the British pound was both making money and losing money if it went against you in greater detail or a greater amount than on the euro. So I think the euro is about $12.50 a tick, and maybe the British pound is about $15 a tick. I'm not sure, but somewhere around there. All right. Let's just go back. Let's go back to the profit charts and just look at the S&P 500 a little bit longer, and let's just maybe discuss, you know, what to expect. Let's say, I don't know what the range is here. The range on this candle is, now granted this is a whole week, okay, so the high is, where's the high? 3,021.99. So we're pretty good ways below that. We're 25 points below the high. But if we do take out the high, if we take out this, let's zoom in again. I just want to kind of help you with the game plan in case you don't have one or you feel uncomfortable or whatever. But if we take out this high, we're likely we're likely to go on up and maybe get a candle that looks a little something like this. Okay. And this happens a lot at tops. You get, or you'll get, you get something that looks, kind of like, a little body. Bottom line is a little body, okay, and then something like that with another long tail down this way. So you could get something that looks like that. Anyway, bottom line is you'll probably be in the wick at the end of the week, or when it crosses back down through this. And I would say, even if we do make a new high, if we get this, I would say you need to be pretty cautious around these new highs. I don't think the next move is going to be, like that. In other words, I don't think there's anything like that you have to worry about missing for that. So, now the other side of the coin is if we go lower next week, then what I would expect is that we would just have a series of, stair steps. Maybe one a little higher like so, and then, at some point it's going to accelerate, something like this, and like that, and maybe like that, and like that, and then maybe you get something like this, down here on the bottom. And that's where we're going to look to, well, we're not at the bottom yet, never mind. The bottom's all the way down here below 2300. So, but you get the idea. We're going to, it'll start off kind of slow. Just keep in mind that this is a high, okay? There's a high right here. And then there's a low here. And then this would be a lower high, okay? So that should send up all kinds of, red flags right there. High, low, lower high. And we're going to probably make a lower low, okay? And then we might rally a little bit and then go back down again. So, and then the bigger support level is this pivot right here. Okay. In other words, we could pause right here on this pivot a little bit, pause for a week or two. But the larger degree pivot that we need to be focused on is this one down here. Off of this low right here. Okay. So I just wanted to recap that for you, help you prepare a little bit to weather whatever storm we got coming. Speaking of storms, we had like 10 inches here in Pearland. Pearland's just south of Houston, about 15 miles. But an area up kind of halfway between Houston and Beaumont, a place called Winnie, got 43 inches in a 12-hour period. Now that is a lot of rain. Of course, that's why you saw all those people in boats and airboats and canoes rowing out of their houses. And that's the way it is down here in Southeast Texas, man. You can get, these tropical storms can dump a lot of rain on you in a pretty short period of time. We've seen a couple of them here in my area, but been lucky enough not to flood. So we're grateful for that. But it is something to see sometimes, this rain that can come, and really, it's almost biblical, the amount of rain. So anyway, hope everybody's all right. If anybody's listening to this that had flooding, I'm really sorry to hear that, and hope you get back on your feet as soon as possible. But, don't forget about protecting your nest egg. We're at a juncture here where some things could happen. So just keep your eyes open and be nimble. And if you have any questions or comments, please put them in the comments section here on YouTube, and we'll try to discuss them. All right, everybody, thanks a lot for coming in, and we'll talk to you next week. Bye-bye.